வரலாற்று சிறப்புமிக்க விழாவுக்கு தலைமை விருந்தினராக வந்திருக்கும் திரு சாந்திலால் ஜெயின் அவர்களே, சிறப்பு விருந்தினர்களாக வந்திருக்கும் திரு இம்ரான் அமீன் சித்திகி அவர்களே, திரு அஸ்வினி குமார் அவர்களே, தோழர் முரளி சௌந்தரராஜன் அவர்களே, தோழர் சௌமியா தத்தா அவர்களே, சிறப்பு உரையாற்ற வந்திருக்கும் தோழர் ராம்நாத் சுக்லா அவர்களே, தமிழ்நாடு புதுச்சேரி இந்தியன் பேங்க் ஆஃபீஸர்ஸ் அசோசியேஷனோட தலைவர் மோகன்ராஜ் அவர்களே, பொதுச் செயலாளர் சேகரன் அவர்களே, இந்த விழாவிற்கு வரவேற்பு குழு தலைவர் எஸ்பி சந்திரசேகர் அவர்களே, செயலர் சி விக்னேஸ்வரன் அவர்களே, இங்கே கூடியிருக்கும் இந்தியன் பேங்க் குடும்பத்தின் அனைத்து உறுப்பினர்களே, உங்கள் அனைவருக்கும் என் சார்பாகவும் முதலமைச்சர் சார்பாகவும் என் வணக்கத்தை தெரிவித்துக் கொள்கிறேன். In fact, the Chief Minister was very particular, called me twice to make sure that I was attending this program, and I was in Chennai for this program today. As mentioned by the Secretary earlier, the inauguration of this association was done by our great leader, Muttamilar Thalavar Kalaignar. On that basis, the Chief Minister was very keen that our association with the staff, the organization should continue, and on that basis, he made sure that I was here today. I want to say a few things from a broader perspective. How we do, what we do, why we do as a government, and why the banks in general and banks like Indian Bank that were born in Tamil Nadu and have a big share of their business in Tamil Nadu are so important to us. If you look at the traditional definition of financial institutions, banks fall into the category financial intermediaries. That is, they intermediate between the savings, the transfer of money across time that individuals, families, associations require, and the demands of the capital from the borrowers, who are the governments, government entities, private sector entities, entrepreneurs, partnerships, etc. That's the job of a bank at the core, at the theory. But if you take that definition and look around the world, places like the United States, more than 80% of all credit, starting with overnight deposits, trillions of dollars, all the way to perpetual bonds or equity, 80% of these will be transacted through the public markets, and hardly 20% will go through the banks. As you start moving to Europe, then Asia, Japan, you start coming this way, that ratio changes dramatically. If you come to a country like India, less than 20% of the total capital will be met through the markets, and 80% will be intermediated through the banks. Now, there are many reasons for this. One of the main reasons being that we don't have the underpinnings, the infrastructure in the dispute resolution system, in the documentation system, in the market underpinnings or infrastructure. And therefore, the role of the banks is very important. In fact, when I was at Standard Chartered, which was the first time I had worked in emerging markets, till then I had only worked in advanced markets, in developed economies. We had a rule of thumb that in any country, if we expected the GDP growth, because Standard Chartered was mostly an emerging market bank, we had a rule of thumb that any country, if we expected GDP growth to be X, we should expect the credit book to grow 2X. And we should plan our capital, etc., accordingly for the appropriate ratios. Because growth in emerging markets is largely dependent on credit and bank credit at that. So that is the understanding that I came to this office with when the Chief Minister asked me to take over as Finance Minister. One of the first things I did was ensure that I myself attended every single state level bankers committee meeting and got engaged in the actual mechanics and the processes of what was happening, because I understand the value of the banks. This is an unusual process. I can assure you that at best IAS officers used to go. But since our government came, I personally attend every SLBC meeting. And we get into great level of detail, program by program, district by district. And I have been requesting, some like Thiru Shantilal Jain may say, instigating several improvements in data collection, in frequency, in granularity that we use as the basis for the SLBC meetings. Because when the government and the banks work together, whether that's the union government, the state government, joint programs between both of us and the banks, then the amplifier effect, the accelerator effect that we can bring to economic growth is very, very high and very valuable. So I recognize that, I work on that. In particular, at all these banks, I have said, at all these meetings, I have said exactly what Thiru Jain has said here, which is that banks need to diversify their books. In this country, we have spent too much of the last few decades giving too much credit to too few people and therefore having concentrated risk that turns out to create all kinds of problems. You see, banks are not inherently in the long-term lending business, or they should not be. Anybody who studies finance from a technical perspective, all banks have a basic asset liability duration mismatch. Your deposits are largely short-term deposits or demand deposits. If you start lending to 30-year projects, 50-year projects, 15-year projects, you have a basic problem. Your assets and liability duration are significantly mismatched, and no matter how many guarantees are there, no matter how much Reserve Bank protection is there, this is not a sustainable business model. That's why long-term lending should be done through other mechanisms, 15-year, 30-year bonds, through secured lending, through infrastructure, cash flow-based trusts, and so forth. In fact, those have not been observed at all. Nationalized banks have been put on the hook by politicians and ended up taking huge concentrations in projects that prudence would not have suggested, and ended up bearing the consequences of these. And we see the big NPA book that still continues after a lot of attempts at resolution. This has to change. For this reason, I have been saying at every SLBC meeting that banks need to leverage technology to reduce the cost of KYC, to reduce the cost of tracking, continuity, and to greatly diversify your books to the MSME sector, to individuals, to entrepreneurs, above and beyond what the government programs ask you to do. That is good for the bank, it is good for society, it is good for economic growth, it's good for employment. So I'll reiterate that here. Exactly what Thiru Jain said. Don't concentrate, though it's easier to give a known credit risk and easier to pass that in committee and easier to increase the allocation to that credit. Prudent banking as well as nation building requires that you diversify the book, you bring on board many more customers, you use technology, you use the increasing connectivity of data systems to make the KYC easier and to do the credit checks faster and better and diversify your book. One of the big differences I noticed after having been a banker in international markets when I came here was the lack of transparency within the banking system about each other's books. You see, even that 20% of the credit market that was within the banks, much of that was done in syndicated lending. And what syndicated lending does, it allows the banks to help each other monitor risk, to diversify, to make sure that your single borrower limits are not breached, and to have greater transparency into what is happening with every borrower, every major loan. I always felt that the RBI itself didn't do nearly as good a job as the Federal Reserve in the US, or the Bank of England in the UK, or the ECB, or even the Monetary Authority of Singapore, MAS. But one thing I like a lot, which I learned today, is this AIBOC. Because I think what the AIBOC can do is substitute a bit for this lack of a formal syndication and bank association database. And the power that comes from integrating all the different bank employees associations, I think, is enormous and will serve you well. So I'm very happy to note that this All India Bank Officers Conference or Confederation is very active and is represented well here today. I know these are difficult times. Very often we find in public policy that suddenly everybody wants to bolt the barn door after the horses have run out. And when a crisis happens, very often it is not truly analyzed and the right modifications or right corrective actions are taken, but the easy ones, the ones that make it look like something is happening, when in fact the root cause and the corrective action may not be linked together at all. I can give you many examples, not unique to banks, not unique to finance. Government policy tends to be a bit knee-jerk and driven by politics and perception. That's unfortunate, but that's the world we live in. In that context, you must assume that the pressure on banks, particularly public sector banks, will continue to increase. But I would urge you to use technology and communications as your first safeguard. There's going to be tremendous revolution in retail banking, payments, in transfers. It's already happening. Fintech is upon us. It's only going to accelerate. These are things that can help safeguard you from unwarranted intrusion. And at some level, as we have seen in the world, there are some banks that are too big to fail. There are some corporates that are too big to allow to collapse. And once an organization becomes integral to the system, then the political pressures on it reduce a lot. So broadly, I will tell you that you should embrace technology as far as possible and use it as a strengthener to your activities rather than see it as a threat. Because the revolution is upon us. The technology is going to descend on this sector as in many other sectors, whether we like it or not. And those that can harness it for their benefit will stand a much better future than those who see it as a threat and try to prevent it from happening. So with those few ideas based on my personal experience, let me reiterate again both the Chief Minister's and my felicitations for this to be a successful conference, a celebration of the Diamond Jubilee and the 7th Triennial Conference of this association, of the long history of the bank. I wish you the best, not just for today, but for the future of the bank and for all your careers. I thank you once again for inviting me and giving me this opportunity, and I will close my remarks. Thank you very much.